I want you to close your eyes for a second. Seriously, just for a moment. Imagine a safety net.
Okay.
But I don't mean the small bouncy kind you see at a circus under a trapeze artist. I want you to imagine a net that is so vast it spans an entire country.
That is a big net.
It's massive. It's stretching across thousands of kilometers of highway, hovering over millions of cars.
Right.
It's draped over factories in Kosaili, over summer homes in Bodrum, over massive container ships navigating the Bosphorus.
Mm-hmm.
It's even there, invisible, when you're walking down the sidewalk and trip, or when a sudden illness lands you in an emergency room at 3:00 a.m.
And like any net, it has to be woven, has to be maintained. And most importantly, it has to be strong enough to catch things that are very, very heavy.
Exactly. But this net isn't made of rope or nylon, it's made of money. It's made of risk calculations, probability math, and contracts.
And today we're looking at one of the master weavers.
Today we are looking at one of the master weavers of that net. We are doing a deep dive into Aksigorta A, a titan of the Turkish insurance sector.
And the timing really couldn't be better. We have the non-consolidated financial results right here in front of us for the full year ending December 31st, 2025.
2025. I think most people in Turkey, or anyone watching the Turkish economy, would agree that 2025 was a character-building year.
To put it mildly.
Yeah.
I mean, you had volatile currency, high inflation, shifting regulations. It's the kind of environment that tests the structural integrity of any business.
Right. If you are weak, you crack.
And if you are strong, you might just get stronger.
Right. And honestly, when I usually look at insurance companies' spreadsheets, my eyes tend to glaze over. It feels like they're written in a secret code.
Oh, absolutely.
You see terms like technical provisions, IBNR, quota share, general technical expense. It's designed to be impenetrable.
It can certainly feel that way. It's dense. But that is exactly why we are here. My mission today is to take that insurance speak and translate it into plain, actionable English.
Please do.
Because fundamentally, if you strip away the acronyms, insurance is a very simple business model masked by very complex math.
How so?
It's a casino, but in reverse. It's a company making a bet.
A bet.
A bet on what might go wrong. And more importantly, it's a bet that they can collect enough cash from you today to pay for your disaster tomorrow and still have a profit left over for their shareholders.
That is the perfect way to frame it. Welcome.
It's good to be here.
So, we have a mission today. We are going to strip away the jargon. We are going to look at Aksigorta through the eyes of a retail investor, someone listening right now who wants to know, is this company healthy?
Is it growing?
Is it growing? And crucially, how does it handle its money in an economy where the value of money itself is changing every single day?
That is the multi-billion lira question. In an inflationary environment, insurance isn't just a service. It's a wild financial ride.
Let's first get to know the company a little. Before we start counting the billions in the bank account, let's ground ourselves. Who are these people? Is Aksigorta some new fintech startup disrupting the scene?
No, far from it. If Aksigorta were a person, they'd be eligible for retirement. They were founded on April 25, 1960.
So they've been around for over 65 years.
They have seen coups, economic crises, booms, busts, devaluations, and revaluations. They have navigated the entire modern history of the Turkish economy.
Then where are they based?
Their headquarters is right in the heart of the financial district in Ataşehir, Istanbul. If you look at the report, the address is Barbaros Mahallesi, İlmur Bulvarı.
It's a very slick part of town. A lot of finance happens there.
Exactly. And looking at their branding, they use this slogan, Bambaşka.
Bambaşka. For our non-Turkish speakers, that translates roughly to something else or completely different.
It's a very specific branding choice. I mean, think about it. Insurance is a commodity, right? My car insurance policy looks a lot like your car insurance policy.
Like a piece of paper.
It's a piece of paper. By using Bambaşka, they are signaling a desire to break out of that commodity trap. They want to be seen as unique in experience, distinct from the gray suits of the industry.
Now, the report title says non-consolidated. I want to pause on that because we often look at consolidated reports. What are we missing by looking at the non-consolidated version?
You know, in this specific case, not much that changes the narrative. Non-consolidated just means we're looking at the core engine Aksigorta itself without blending in the financials of every tiny subsidiary.
Okay.
However, if you dig into footnote 9, you do see they have a strategic investment in something called Tarsim.
Tarsim, that's the agricultural insurance pool, right?
Correct. They own a 3.7% share.
Yeah.
It used to be classified under available for sale assets, but now it's an associate or Stirak.
So it's more integrated into their strategy now.
It seems so. It's not a controlling stake, but it's
Okay.
important context. It connects them to the agricultural stability of the country. But for our purposes today, the non-consolidated view is actually the purest way to judge their insurance performance.
Okay, let's talk about who is driving the bus, or the supertanker, as you might call it later. Who owns Aksigorta?
This is, in my opinion, the single most critical thing for an investor to understand. You aren't just buying a stock ticker. You are buying into a marriage, a very strategic marriage between local power and international brains. Aksigorta is a joint venture.
Break down the partners for me.
On one side of the table, you have Haku Umar Sabancha, holding
Huh.
Ass and Fleisch. They own exactly 36% of the company.
The Sabancı family, one of the biggest, most influential conglomerates in Turkish history.
Exactly. They bring the local leverage. They have the connections, the reputation, the banking relationships, think Akbank, and the deep understanding of the Turkish consumer. They are the muscle and the network.
And on the other side of the table,
You have Aegis Insurance International NV. They also own exactly 36%.
they're Belgian, right?
Yes, a Belgian giant with operations across Europe and Asia. They bring the brains regarding technical insurance.
So the actuarial science, the risk modeling.
All of it. The global best practices, the technology. It's perfect pairing, really.
So you have Sabancı opening the doors in Turkey, and Aegea's ensuring the math behind the policies is sound. 36% and 36%. That's 72%.
Which leaves 28%. That is the public float.
Yeah.
That is what trades on Borsa Istanbul under the ticker AKGRT. That is what you and I can buy.
I really like that structure. Often with foreign companies entering emerging markets, they struggle to understand the culture.
Right.
And local companies sometimes struggle to keep up with global tech trends. This seems like it plugs both holes.
It provides stability. You have two massive parents who are incentivized to keep the kid healthy. If the company needs capital, they have deep pockets. If they need strategy, they have global vision.
Let's talk about their physical footprint. In 2025, does an insurance company actually need offices, or is it all just an app?
The app is important, especially for the younger generation, but insurance, especially in Turkey, is still a handshake business. Trust is physical.
That's a great point.
Aksigorta has 10 regional directorates covering the entire map: Istanbul, Anadolu, Avrupa, Trakya, Akdeniz, Ankara, and so on.
But they don't sell all the policies themselves, surely.
No, and this is the scale of the operation that impressed me. The report lists 3,661 authorized agencies.
Wait, 3,600?
3,661. Imagine an army of agents. These are the small offices in your neighborhood, the brokers who know your dad, the people you call when you have a fender bender.
That is a massive moat. If a competitor wants to challenge Aksigorta, they can't just build a website. They have to replicate 3,600 relationships.
Precisely. That distribution network is their lifeblood. It's expensive to maintain, as we'll see in the commission expenses later, but it guarantees cash flow. It ensures that when someone buys a car, there's an agent right there to sell them a policy.
Speaking of the people running the show, I checked the headcount. They are growing.
Modestly, yes. They went from 845 employees to 884 in 2025.
That's interesting. In a world where everyone is laying people off and replacing them with AI, they added nearly 40 people.
It suggests expansion, or perhaps bringing some tech roles in-house. It's a sign of health, I think.
And looking at the leadership, Chairman S. Hakan Binbaşgil
A veteran banker, very well respected.
and GM M. Fırat Kuruka. But I also noticed something in the footnotes that retail investors often skip, but they really shouldn't.
Let me guess. Executive compensation.
The price of leadership. Yes. Note 1.6 in the financial statements.
That's the number.
The total bill for the top management board, GM assistants, was 86.1 million TL for the year.
Which is up from 63.3 million TL the year before.
So that's a roughly 36% raise. Is that justified?
Well, it tracks with inflation, largely.
Yeah.
But more importantly, you have to weigh it against the assets they are managing.
That's true.
We are talking about a company with over 32 billion TL in assets. Managing that risk requires talent. If they hired cheap management and blew up the risk model, that 86 million would seem like pennies compared to the losses.
Fair point. You get what you pay for. And considering the profit numbers we are about to see, maybe they earned it.
I also wanted to point out something on the board. The female representation. I saw names like Fatma Dilikyardım on the audit committee and Zilia Ersin Altanok As an assistant GM, it's just good to see that diversity in leadership.
Absolutely. Okay, before we move on to the money, let's define the product. You said insurance, but that's a broad church. What are they actually selling?
They operate in the non-life sector, in Turkish, elementer.
So if I want a pension,
You go elsewhere. They have a tiny slice of life insurance related to credit protection, but they aren't a BES private pension company. Their menu is designed to protect your physical stuff.
run me through the menu.
It's comprehensive. You've got fire, marine, accident, land vehicles, that's your casco, air vehicles, water vehicles, liability, legal protection, and health.
It's the things that break, burn, or crash portfolio.
Exactly that.
Okay, we know who they are. We know what they sell. Now we can move on to our analysis. Let's open the ledger.
But before we read the numbers, we have to check the weather,
The weather.
the economic weather, the context of 2025. You cannot understand these numbers without understanding the currency.
Of course. I was looking at the currency rates in the footnotes. Note 2.24. It paints a vivid picture.
It tells the whole story of their cost base.
At the end of 2024, the dollar was around 35.28 TL. By the end of 2025, it was 42.85 TL.
A huge jump. And the euro.
The euro went from roughly 36.74 to 50.29. It broke the psychological 50 barrier.
Now, connect the dots for the listener. Why does the euro hitting 50 matter for a Turkish insurance company?
Well, I assume if I drive a German car
Yes.
and I smash the bumper,
That bumper is imported. Or the high-tech LED headlight is priced in euros. Or the paint has components imported from Europe.
so when the euro skyrockets, the cost of a simple car accident skyrockets with it.
Exactly. Aksigorta collects premiums in lira. But a huge percentage of their claims, car parts, medical machinery, specialized construction materials, are effectively pegged to foreign currency.
That's the squeeze. They're collecting lira today to pay for euro-denominated disasters tomorrow.
That is the fundamental tension of 2025.
So let's do a quick SWOT analysis to set the stage. Strength.
The Sabancı aids backing, the 3,600 agencies, and a very, very strong cash position, which we will get to. They are a fortress.
Weaknesses.
Operational costs are high, personnel and commissions are rising fast, and there's a heavy reliance on motor insurance, which can be a low-margin, high-headache business.
Opportunities.
High interest rates.
Yeah.
When you sit on cash in Turkey right now, you make good money. Also, there's growth in health insurance, which has better margins than cars.
Then threats.
The currency, obviously. Regulatory caps. The government telling them they can't raise traffic premiums despite costs going up. And the IBNR.
The ghost in the machine. We'll get to the IBNR, the financials.
We certainly will.
Okay, let's dive into the income statement. We are looking at the period of Jan 1 to December 31, 2025. Let's start at the very top. Revenue.
Okay, so we're looking at non-life technical income.
It reached 16.8 billion TL. That's up from 14.9 billion the year before.
That's decent growth. But I want to look at written premiums. That's the actual cash register ringing. Net written premiums hit 14.05 billion TL.
Up from 11.06 billion. That's a 27% jump. Now, is that real growth or is that just inflation repricing?
It's likely a mix, but considering they added employees and kept their agency network strong, they definitely retained volume. They didn't shrink. But let's look at what's sold. Segment information, note 5. This is where the story gets interesting.
The biggest number on the page is land vehicles liability. That's the mandatory traffic insurance.
4.25 billion TL, a huge chunk.
And right behind it is land vehicles, or casco, 3.08 billion TL.
So combined, over 7 billion TL of their revenue comes from cars.
That's half the business.
It is. If you invest in Aksigorta, you are essentially investing in the Turkish automotive market. You are betting that people will keep driving, keep buying cars, and hopefully crash slightly less often.
I see health is growing too, about 676 million TL.
It's a smaller piece of the pie, but strategic. Medical inflation is high, but premiums adjust faster there. And fire and natural disasters brought in nearly 2 billion TL.
That's the earthquake insurance, mostly?
Mostly, yes. A critical line of business.
Okay, so 14 billion came in. That sounds great, but are they keeping any of it? Let's go to the bottom line. Net profit.
The headline number for 2025 is 2.49 billion TL.
Up from 1.86 billion in 2024. That's a 34% increase.
In a year where the euro went up 35–40%, keeping profit growth at 34% is respectable. It means they held their ground.
They didn't shrink in real terms.
Right. They didn't.
I noticed another line item called technical balance. It says 3.27 billion TL. How is that different from net profit?
This is a crucial distinction for an insurance company. Technical balance is the profit from the actual insurance business premiums minus claims.
So their core operation.
Exactly. Net profit includes everything else, like taxes and some investment shifts. The fact that the technical balance is $3.27 billion, up from $2.11 billion, tells me the core business is working.
They aren't just a hedge fund disguised as an insurer.
No. Some insurers lose money on policies and try to make it back in the stock market. Aksigorta is actually making money on the policies. That shows underwriting discipline. They aren't pricing too cheap just to get market share.
But to make that profit, they had to pay out a staggering amount of money.
Oh, yeah. The paid claims, this is the part of the report that hurts to read.
I'm looking at the cash flow statement. Net paid claims were 7.17 billion TL.
7 billion.
That is a massive number.
Yep.
In 2024, it was 4.33 billion. That is a 65% increase in payouts.
Pause on that for a second. Let that sink in. Revenue grew roughly 27%. Claims paid grew 65%.
That sounds bad.
It sounds scary. It shows the claim inflation we talked about. Repairing cars got way more expensive than the premiums they collected at the start of the year anticipated. This is the inflationary whiplash.
So how did they still make a record profit if claims went up so much faster than sales?
3 ways. 1, volume. They sold more policies overall. 2, investment income, which we'll discuss. And 3, they had really good reserves from previous years.
Okay.
But that disconnect revenue up 27%, claims up 65% is the warning light on the dashboard. They have to raise prices next year. They have no choice.
Let's talk about the other costs. The Army isn't free.
Not at all. Commission expenses, 4.44 billion TL.
They paid 4.4 billion to agents to bring in 14 billion. That's a 30% acquisition cost, basically.
Roughly, yes. It's the cost of doing business. But remember, those agents are doing the customer service, the sales, the paperwork. If Aksigorta tried to do that centrally, their personnel costs would triple.
Speaking of personnel, those costs jumped too. 2.06 billion TL, up from 1.42 billion.
Wage inflation, the minimum wage hikes, the cost of living adjustments, it's reflected right there. No surprise.
Let's move to the balance sheet. This is where we see the health of the company. What do they own?
Total assets jumped to 32.6 billion TL, up from 24.4 billion. That is significant growth in the sheer size of the company.
But I want you to look at one specific line, cash and cash equivalents.
Cash is king, especially in this economy.
They have 7.08 billion TL sitting in cash.
Up from 4.5 billion, a huge increase.
Why sit on 7 billion lira? Why not buy buildings? Why not buy Bitcoin? Why not invest it in something flashier?
Because they are an insurer. Liquidity is safety. If a massive earthquake hits Istanbul tomorrow, they can't pay claims with a building. They can't say, hang on, let me sell this real estate. They need liquid cash immediately.
That makes sense.
Also, with Turkish interest rates where they are in 2025, that cash isn't just sitting under a mattress. It is likely earning 40–50% interest just sitting in time deposits. It's a revenue generator in its own right.
That brings us to the liabilities. What do they owe?
The good news, financial debt is negligible, 38 million TL, plus some lease liabilities for their offices. For a company of this size, that is basically zero debt.
They are not beholden to banks.
Not at all, but
they have technical provisions, 17.17 billion TL.
that is the real debt of an insurance company. That is money they have set aside because they know they will have to pay it out eventually for claims.
And inside that number is the term we teased earlier, IBNR.
Incurred, but not reported.
It sounds like a sci-fi movie title. Can we unpack this? Why is this so important?
It's the most dangerous number in the book. It's the black hole in the balance sheet.
Okay, explain.
Imagine this. It's December 31st, 11:50 p.m. You're driving home from a New Year's Eve party. You slide on ice and crash your car.
Okay. Everyone is safe, I hope.
Everyone is safe, but the car is totaled.
Okay.
You exchange info, you get a tow truck, you go home. You don't call the insurance company until January 2nd because of the holiday.
Right. Makes sense.
When Aksigorta closes its books on December 31st at midnight, they don't know you crashed. But the liability exists. They owe you money. You will call.
So they have to guess that I crashed.
Yes. They have to guess how many people crashed but haven't called yet. And not just for cars. Think about health insurance. You might get sick in December, but not send the bill until February.
Or a lawsuit. Someone might sue you for an accident that happened 3 years ago.
Precisely. That's the long tail.
That sounds impossibly hard to calculate.
It is actuarial science. They use statistical models, like the chain ladder method mentioned in the report, to look at historical patterns and project how many ghost claims are out there.
And what is the number they came up with?
Net IBNR is 8.99 billion TL.
9 billion lira. That's more than their total cash on hand.
It is. It's a massive estimate. And here is the risk for you as an investor. If their math is wrong, if they underestimated the severity of those unknown crashes by even 10%, that's a billion lira hole in their profit and loss statement.
So their profit of 2.5 billion, if they got the IBNR wrong, that profit could vanish.
Theoretically, yes. That is why the auditors, Deloitte, listed this as a key audit matter. They spent weeks poking this number to make sure it wasn't just a guess, but a calculated projection.
It really highlights that insurance is just a game of confidence in your own math.
It is. And looking at the reserves, Aksigorta appears to be conservative. They are reserving heavily. They aren't pretending the risk doesn't exist. They are preparing for it.
Let's talk about how they make extra money. Investments. We said earlier they are asset managers in disguise.
Absolutely. They collect premiums up front and pay claims later. In between, they invest that money. It's called the float.
I see investment income transfer to technical part is 5.5 billion TL. That's a huge chunk of change.
And it absolutely saved their profitability, given how much claims cost went up.
And look at note 36. Did they get crushed by the currency?
Let's see. Net currency exchange gains, but a net gain of roughly 640 million TL.
Wow. So they made money on the currency swing?
This is vital. This suggests they held enough assets in foreign currency or pegged instruments to offset the liability risk. It's a natural hedge. They use the dollar to fight the dollar. Very smart.
Let's wrap up the financials with the equity. What is the company worth to its owners?
Total shareholder equity is 5.8 billion TL.
Up from 4 billion TL. That's a 45% increase in book value.
Which is fantastic. And here is a ratio I love, return on equity, ROE.
Let's calculate it live. Net profit was 2.49 billion. Equity is roughly 5.8 billion.
So you take 2.49 divided by 5.8, and that gives you an ROE of roughly 43%.
43%. For a retail investor, seeing a company generate a 43% return on its own equity, that is a very, very attractive number.
It is. It shows incredible capital efficiency. They are using the shareholders' money very effectively to generate profit.
And what about the capital itself? Did they issue new shares?
Paid-in capital is 1.612 billion TL.
Yeah.
It hasn't changed. They didn't dilute shareholders by printing more shares, which is great. And there's no mention of hitting their registered capital ceiling, so they have room to maneuver if they ever need to raise cash.
Now we need to look at the fine print, the footnotes. This is where the secrets usually hide. What caught your eye?
The dividend question. Everyone loves a dividend. Did they pay one?
Well, note 38 says the General Assembly for 2025 hasn't happened yet, so no distribution yet.
But looking at the previous period column, it seems they focused on building reserves. Note 15 mentions legal reserves. They're setting aside money into first and second legal reserves.
This suggests a strategy of strengthening the fortress rather than just handing out cash immediately, which, given the economic climate of 2025, might be wise.
Exactly. Cash inside the company is safer than cash outside the company right now. But here is the footnote that made me pause. Legal battles. Note 23.3.
Oh, I saw this. Pending lawsuits. The numbers are staggering.
The company faces lawsuits totaling 4.6 billion TL in principal claims, plus another 2 billion TL in interest.
That's nearly 7 billion lira in potential legal payouts. What are these lawsuits?
In the insurance business, people sue. They sue when their claim is denied. They sue when they think they weren't paid enough. Bodily injury claims can drag on for years in court. It's the nature of the beast.
Yet 7 billion? That could wipe out their equity.
It sounds scary. But look at the provisions they set aside. They have set aside reserves for this. They acknowledge the risk and have money in the technical provisions bucket to cover it.
So it's not a surprise bill that will land tomorrow. They are expecting it.
They are managing it. But it is a reminder for any investor. Insurance is a litigious business. You are constantly in court.
One last risk management point. Reinsurance. We said they have a safety net, but who catches Aksigorta if they fall?
They have quota share and excess of loss agreements. Essentially, they buy insurance for themselves from even bigger global players.
Especially for earthquakes, right? That's the ultimate risk in Turkey.
Note 2.15 mentions specific protections for catastrophic events like earthquakes. They don't keep all that risk. They pass a chunk of it to global reinsurers. If the big one hits Istanbul, Aksigorta isn't paying for every building alone. They have backup.
That is reassuring. Finally, what is the management thinking about the future? We don't have a transcript of their thoughts, but we can infer from the report.
They seem focused on digitalization and managing the motor portfolio carefully. Note 5 shows the segments. They are balancing the portfolio.
Right.
They know traffic is high volume, but low margin and high risk. They are likely trying to push more profitable lines like fire and liability to balance that out.
So let's bring this all together. We've looked at the profile, the $16 billion in revenue, the $7 billion in cash, the massive claims, and the ghost of IBNR.
It's a complex picture, no doubt about it.
If you had to summarize Aksigorta in 2025 in one metaphor.
I call it a supertanker. It's huge. $32 billion in assets. It's carrying a volatile cargo inflationary risk and traffic accidents.
Yeah.
But it's stable. It has a massive hull, that $5.8 billion in equity and $7 billion in cash.
Okay.
It's moving through stormy seas, the economy, but it's making good speed, delivering 34% profit growth. It takes a lot to sink a ship this well-built.
I like that. So for the retail investor listening, what are the key takeaways? Let's boil it down.
Number 1, growth. Revenue and assets are growing. They're keeping up with the economy.
Number 2,
Profit. Net profit is up 34%. ROE is 43%. The engine is working efficiently.
Number 3,
Safety. That cash pile of $7 billion TL is a huge buffer, and they have almost zero bank debt. That is a very clean balance sheet.
and number 4, the flip side.
Risk. Do not ignore the IBNR in the lawsuits. There are billions of liras in estimated liabilities. If the inflation rate spikes unexpectedly, or the courts rule against them more often, those reserves might need to be topped up, which eats into profit.
So, the verdict.
For a retail investor, this looks like a company that knows how to price risk. They survived 2025's currency swing and came out richer. That implies strong management.
It definitely does. You know, I have this provocative thought to leave our listeners with.
What's that?
We all complain about inflation. We see prices go up at the grocery store or at the gas pump. We feel helpless.
Right.
But here's a company whose revenue is tied to the value of things.
Go on.
When the price of a car goes up, the price to insure it goes up. In a world where the lira fluctuates and costs rise, is an insurance company actually the booked hedge? Because when prices go up, premiums go up too. They might be the only ones inflation-proofing their own revenue stream.
That is a very smart way to look at it. You're buying a piece of the inflation cycle itself. You're betting on the house.
Something to mull over. We hope you enjoyed this deep dive into Aksigorta. It's a beast of a report, but hopefully it's a little less scary now.
It was a pleasure unpacking it.
If you found value in this breakdown, please smash that like button. It really helps us out.
And make sure to subscribe to the channel so you don't miss the next analysis. We have some interesting companies coming up.
Share this content with your investor friends, the ones who stare at spreadsheets and look confused. Help them out.
And if you want to support the work we do here, digging into these thousands of pages, please evaluate the membership options to support the channel.
Remember, you can also show your support with super thanks. Every bit helps us keep the lights on and the analysis flowing.
Thanks for listening.
See it in the next deep dive.